Every month, I pull the actual MLS data for the Denver metro real estate market. It's not the national headlines, not doom and gloom hot takes, just the real numbers for what is happening in the communities where you are actually buying and selling. So this is my May 2026 market update. The data I'm covering today comes from REcolorado's April 2026 Market Watch report. This was released on May 6th. We're also going to take a look at some data from the Freddie Mac rate data. So here's what we are covering. The headline numbers for the metro, median prices broken down by submarket, days on market, and what you are actually paying at current rates, and what all of this means if you are a buyer or seller heading into the summer. So let's get into it. So to start with, we're looking at the metro-wide median home price, which in April of 2026 came in at $600,000 even. And this is flat year over year. There's no dramatic drop, no sudden spike. Prices are actually holding steady. And closed listings were also essentially flat at 4,018 homes sold, right in line with April of 2025. It's consistent buyer activity and consistent transaction volume. So now, here is the number that I think is often getting overlooked. Pending contracts. Essentially, these are contracts where a buyer has made an offer, the seller has accepted the offer, but the home hasn't sold yet. Pending contracts were up 8% year over year, 4,326 pending sales. Now this is a leading indicator. So pending today is closed in 30 to 45 days. So when pending contracts are rising, it tells you where the market is heading, not just where it has been. And right now it's heading into a more active summer than a lot of people are anticipating. At the same time, new listings are down 6% year over year, and active inventory has fallen about 9%. So you have more buyer demand, 8%, chasing less available homes. It's not a soft market, it's a tightening market. So let's look at how individual submarkets are performing, because the metro median only tells part of the story. So the city of Denver is sitting around 595,000, which is up about 5% year over year. The single family side is healthy. The condo segment has more inventory and longer days on market, which means if you are a buyer looking for value in the urban core, attached housing is where the negotiating room is right now. Arvada is at about 580, and it's one of the more competitive suburban markets in the metro. Old Town Arvada continues to drive demand, and well-priced homes in the $500,000 to $600,000 range are still seeing real activity. Broomfield is tracking right at the metro median, $600,000. So it's steady. This is attracting buyers who want proximity to Boulder County without the full Boulder County price. Lakewood at $548,000 remains the best value play closest to the mountains. Outdoor lifestyle buyers are consistent here, and the west side is performing above the metro average on pace. Centennial is holding near $635, and the Cherry Creek School premium is intact. Well-priced homes here are still going into multiple offer situations. And Littleton is around $572, balanced and active. The historic downtown Littleton and C470 access keep this market a consistent performer. So the takeaway on pricing across the board, prices are stable to modestly higher year over year. There's no submarket in this data that is showing meaningful decline. So now let's talk about pace, because this matters a lot for buyers and sellers right now. Metro-wide median days on market came in at 15 days in April, and that's down 3 days from March, and the market is accelerating heading into the spring buying season. Centennial is moving the fastest at 13 days. So if you're buying near Cherry Creek schools, you need to be pre-approved and ready to move. Arvada and Broomfield are both running around 15 to 16 days. The city of Denver is around 19 days, slightly slower, but still well under 3 weeks. For sellers, 15 days is not the market is slow. This is a market moving at a healthy, competitive pace. The homes that are sitting longer are the ones that came in overpriced, not the ones priced correctly. For buyers, I want to be direct. The homes that check your boxes are not waiting around. If a well-priced home is in one of these markets and hits your search criteria and you want to see it, call your agent that very day. So let's talk about rates, because this is where I think there's a real opportunity that is not getting enough attention. So on May 7th, Freddie Mac put the 30-year fixed rate at 6.37%. A year ago at the same time, it was 6.76. So I know that doesn't sound very dramatic, but let me put it to you in dollar terms. On a $600,000 home, the Denver Metro median with 10% down, you are looking at about $3,372 a month in principal and interest at today's rate. Last year's rate, that same purchase was about $155 more per month. So over a year, that is nearly $1,900 in savings, and over 5 years, that is close to $10,000. That improvement happened quietly without much fanfare. Buyers who have been sitting on the sidelines waiting for rates to get dramatically better may be already missing a window. The consensus from the Mortgage Brokers Association and Fannie Mae is that rates stay in the low to mid 6% range through the rest of 2026. No cliff drop, but also no spike. This is likely the environment we are operating in for the foreseeable future. So what does this all mean if you're actually thinking about buying? First, get pre-approved. Now, not after you find the house you want. 15 days median days on market means the timeline from I love this house to I need to submit an offer is very short. Second, use the fact that inventory is up year over year to be selective. You have more choices than buyers had in 2021, but do not confuse more choices with unlimited time. The right home at the right price still moves fast. And third, the rate math is working more in your favor than it was a year ago. If you've been hesitating because rates feel too high, run the actual numbers with a lender before you make that assumption. You might be surprised where you actually land on monthly payment. And fourth, watch the submarkets. Lakewood and Littleton are offering genuine value right now for buyers who have been priced out of other parts of the metro. So if you're thinking about selling, here's the honest take. The spring momentum is real. Closed listings were up 9% month over month in April. Pending contracts are 8% up year over year. Median price ticked up 2% month over month. The market is building, not softening. But the 12 weeks of active supply means buyers have options. They are not making desperate decisions. A home that comes in overpriced will sit, collect days on market, and eventually sell for less than it would have if you had priced it correctly from day one. So I have published a blog post on exactly this topic, how to price your home right the first time. And I will link that in the description below. Now, the sellers who are winning right now are the ones who enter with a sharp, data-backed price, strong presentation, and a marketing strategy that gets the right buyers in the door in week one. That combination still produces excellent results in this market. So that is the Denver metro market for May of 2026. Prices stable at $600,000, pending activity up 8%, more buyer demand in the pipeline, inventory tightening, rates down meaningfully from a year ago. This is a market where preparation wins. Buyers who get ready before they need to be ready, and sellers who enter with a realistic, well-researched price, those are the people getting the best outcomes right now. If you want to know what these numbers mean specifically in your neighborhood, your price range, or your situation, reach out directly. So I will be back next month with the June market report. And if this was useful, subscribe so you don't miss it. And drop a question in the comments if there is a specific market or topic that you want me to cover next. I'm DC Turner with Navigating Denver, and I'll see you in the next one.